The markets are falling. Red this, red that, tariff this, tariff that. Everything's coming down. What do I sell? What do I buy? What's going on? What do I do? What do I do? What do I do? Welcome back to Jesse Invests. My name is Jesse. Hit that like button down below, the sub button down below before we get started. Get a drink, hang out, leave a comment down below. I'm drinking iced tea that I stole from my wife. So today we're gonna look at what you should be selling, what I'm selling, what should be buying, what should you be doing right now with all this unprecedented news in the market, with the tariffs and just the uncertainty with the United States right now. What am I doing and what can you follow? So I want to start by saying that when you're investing long-term in the stock market, which I am, the approach that I have is I want to invest for the long term through highs, through lows, through whatever's happening. So conditions in the news, political conditions don't change how I invest. If we were at war, I would still be investing. If we were in another pandemic all of a sudden, I'd still be investing. Investing doesn't stop. You have to switch over behind the mindset of it's more like a lifestyle, like paying a bill. It's just something you do. On the first of the month, time to pay your electric, time to pay your stock bill, time to pay it's just something you're paying. It's just something you do. Because that's how you dollar cost average. If you don't do that, you try to time the market, it gets real dicey and you could lose money. You can't lose money, theoretically, you can't lose money if you dollar cost average, but you can if you time it. So that being said, I am doing some buys and sells though. I'm not just sitting on the sidelines. So let's jump into what I'm selling. Drum roll, nothing. I'm selling nothing. I am not selling anything, and in fact, when the markets start falling, that is the worst time to sell as a long-term investor. I want to sell while my stocks are up, while I have made profit. Let's say right here in this image here, I have 9 shares of VU and they're up 10%, $500. If I'm going to sell, I want to make sure I can take some profits out. I do not want to sell when my portfolio is in the red, when it's down, when doing so would make those losses real. It would realize those losses. So the worst time to sell is when everything is falling. So adjust your mindset to, oh my gosh, everything's falling, everything's going down, there's so much uncertainty, everything's scary, I need to get my money out and put it in gold, yada, 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 I need to. That is the worst time because everybody else is doing that, and that is why everything's falling and you're gonna lose money. So what is it a good time to do then? If it's the worst time to sell, it's the best time to buy. And let's go over to my M1 portfolio, the main account I make videos about. This is where I invest in dividend stocks, and I have not sold anything since any of this news has been coming out about these tariffs. What I have been doing is buying. I bought a little bit more of stocks I already hold. I went ahead and bought, let's see here. That was 1 month ago, so I won't say that's something I did, but I did buy $38 of Eli Lilly, which is a brand new company for me. I had not owned any Eli Lilly before. So to answer that question, what am I buying? What should you buy? What should you sell? You can buy or sell whatever you want. What I'm buying and selling, I am buying Eli Lilly. I think that it's a good new position in my portfolio, and I would be buying it whether or not we're up or we're down. Everything I do is unrelated to outside noise. I'm just making decisions unrelated to the status of the economy, things like that. But Eli Lilly has been on a major run up for a long time, and I said back in 2023 that I was gonna get it, but I was like, no, it's too overpriced. And then in 2024, I was like, I'm gonna get it now, but no, now it's really overpriced. And here we are, where you could still say it's overpriced. It seems like it's always gonna be overpriced. So I've just decided to get in now and start my dollar cost averaging. I really like this company. I love that I actually live in Indianapolis where the headquarters is at. So I feel like I see the workers go to work every morning. It's really real to me, so I have that anecdotal attachment. So I like that. And a couple other reasons why I bought this that I won't dive into too much, but really good dividend return, really good growth, good history and payouts with good payouts with the dividends. So they've been consistent with that. They have a long history of that. It's a good contender, but also it has been up in the all-time, the 5-year, the 1 year, the year-to-date, the 3-month, the 1 month. It's tons of green, no periods of falling. So with that, I have to pay that expensive premium, but it looks like it's always going to be returning, which is nice. That actually opened up a new section of my account here called healthcare, because I make all these little subsections of my account for different industries. So I opened up the healthcare tab, which is now 4% of my portfolio goes into healthcare. And I did buy this the other day, so it is down 2%. I will continue to buy in that position. And we can see overall my dividends portfolio is kind of entering a stagnation point because it is with what's going on in the market. So let me kind of pull everything together here. So I am not selling anything. I am buying some Eli Lilly right now, but it's nothing out of the ordinary. I'm reacting as if I always would, as if everything in the market was fine. Because if the markets drop 30% tomorrow, I'm going to continue to buy. I might even look for more money to buy because stuff's even cheaper, but I'm probably going to continue at my usual pace. The market has been going up a ton in the last 12 months, and you can't have your cake and eat it too. You can't have the market exploding in the last 12 months and expect it to continue going and going and going. There's going to be a 30% reset here somewhere. Somewhere is going to be the next big event. History has proven that big stock market events, big world events affect the stock market and make it crash repeatedly. It's proven historically that world events will continue to happen consistently every few years. Constantly there's something going on, from a pandemic to a war to a terrorist attack to tariffs to this, that, to this. There's always something going on. So that is historically proven. It's also proven that after all of these huge tanks in the market, these crashes, the market's recovered every single time. The market has recovered with time. So that's also proven. So looking off that historical evidence, that backs up my confidence so much that it keeps my emotions out of it. You have to keep your emotions out of your investing. When it starts to get scary, conditions start to sound really fearful, a war starts, market crashes, all this stuff, you got to look at the historical evidence to keep you from hitting that sell button when it's not ideal. An image I have for you guys of that is here under my preview right here. This is the S&P 500 from 1950 to 2021. Look at all of these events that caused market crashes. Post-Korean War recession, Eisenhower recession, Kennedy slide, credit crunch, the Nixon recession, oil crisis, Iranian oil crisis, Black Monday, Gulf War, the dot-com bubble, global financial crisis of 2008, U.S. credit downgrade, China-U.S. trade war, and the coronavirus crash in 2021. Which also it continued to go down before it went back up. We're missing a little bit off this chart off the end here. But this is showing that there's always going to be something happening. Maybe it's China trade war into coronavirus crash into tariff war. But it's just going to be another blip. Think about this. In the short term, it's a huge crash. It's terrifying, even that. But in the grand scheme, it's a blip. If we look at here to here, huge gains. What is that time span? 20 years. So you have to have time, of course, but if you have the time available to invest in the market, you're investing for retirement or whatnot, then you have time. Even if you're in your 40s watching this video, you still have time to go through a 20-year time to get your money grown and live through a big blip like that. So this chart right here summarizes why I believe in the S&P 500, and I continue to invest no matter what is going on, and why I would encourage you guys to do the exact same. So on my front over here on the channel on Jesse Invest, not a whole lot is changing with my investing style. I am buying some Eli Lilly. I did want to say a couple other things that I am doing that could be some things to think about with these conditions. One of those things is make sure you are properly diversified. Something that's came to my attention recently was someone in my family came to me and was like, I've been investing for a while, following your videos, and I've made a lot of good returns after being inspired by your videos. But I've noticed that I'm not diversified enough. I feel like I'm way too heavy in stocks. I don't have any gold. I don't have any bonds, and I'm a little older. And I made a good point. They made a great point. So they went ahead and changed their diversifications to still be in stocks in the S&P 500, but have some money in safer things like gold, cash, and bonds. So ask yourself at a point when you're emotionally stable with the market, it might not be right now. Ask yourself when you're at a point to redesignate your finances. Ask yourself, am I too risky? Am I invested in things that are too risky for how I feel comfortable? If you don't feel comfortable holding on to 90% of your money and 90% of your investments in stocks, then that's not for you. Maybe you need to have 60% or even 40% of your money in stocks and have 60% in something safe like gold. It's all gonna come down to personal preference. Whatever amount of money in that you need to do to be able to safely be at peace and step away, that's what you need to do for you. So that's what I would say. Make sure you're diversified appropriately for your risk tolerance. Another thing is make sure that you have some emergency fund and cash on hand, because something I've been thinking about is I don't have a lot of money in my emergency fund. I have like about $1,000. If I have an emergency happen in my life that's more than $1,000, I have to touch my stock accounts, and nothing is going to sting more. It hurts enough to pull money out of a stock account just to cover something in life, but it really stings when you have to pull money out of a stock account at a bad time. I would hate in the next 6 months, if we had a market crash where everything drops 30%, for me to have to pull money out of my stocks while they're at a really weak point, while I lose money. It would be losing money if I pulled them out during a crash. So more important than ever, is it a good time to make sure that you have an emergency fund stocked up so that you can handle a life event and you can leave your stocks untouched? It is something that I am changing with my thought process here because of this news. Making sure I have a beefier emergency fund than I usually would, making sure I really prioritize that more than buying more stocks right now, to make sure that I don't have to touch the stocks I already have. Because whenever the drop happens and the market drops 30% or whatever, whenever that's bound to inevitably come, according to history, it's inevitable. I want to be ready. I want to be ready to lock down, no selling, let it ride through. And I need to make sure that I do not have to touch that money so I can ride out that storm. That's about it today, guys. A little all over the place, but hope you got some information out of this video that was useful. Hit that like button down below. Hit that sub button. It helps me out a lot. A lot of these spreadsheets that I use in my videos, things like this return visualizer, so you can visualize your different accounts and how they're doing. All of those are available in links in my description, so go check those out. And until the next video, I will see you guys on the other side.